Okay, good morning. I can't believe it's November already. Whew, heading into the winter. Well, thank you guys for joining today. Like I said in the text message, I wanted to touch on the FHA 203K program and talk a little bit about that and answer questions that anyone might have. And then another update from me, I just attended a reverse mortgage training yesterday. I don't know if anybody's familiar with those. I might go into it a little bit more in depth on next week's call, but I am able to do reverse mortgages. So for those clients that we might have that are 62 years or older, it's a really great solution for those people to not have a mortgage payment. We can do those on a refinance, but we can also do a reverse mortgage for purchase. So if you have anybody that's a senior that might be downsizing. And I think it's especially relevant in today's market, a senior on fixed income with inflation and the cost of things going up, it could be a really, really great solution. And there's a counseling process that they go through so they fully understand all the implications, but a really cool program that lets them, be in that final home and have more options for lifestyle and things like that. FHA 203K, with a raise of hands or comments, is anybody familiar with an FHA 203K loan, or does anybody know what that is? A little bit. You've heard the term. Okay. Well, again, my goal of these calls is to offer as much value as I can. And when you look at a property, I want you to have all the tools available from a lending standpoint to come up with deals. I was talking with Cynthia. I was at a conference last week for my coaching program with people from all around the nation, and things are slower right now. That's just the market that we're in. I don't like to say it's a bad market. I like to say it's the current market, and we will get through it together, and there will be light on the other side of the tunnel. So just trying to offer value so that we can make more deals happen. So in a nutshell, an FHA 203K loan allows a client to purchase a home, and you can do it with a refinance as well, but it allows them to finance repairs. So in the last couple of years, it seems like, and even currently, the squared away turnkey properties get most of the attention, especially now with the cost of things going up. People don't want to spend, $500,000 on a house and then also have to go through the process and finance repairs and improvements on a property. And additionally, if there's a property that appears like it might need all cash to be purchased, an FHA 203K is a great option to be able to finance repairs and improvements to bring that property up to FHA standards. As you know, peeling paint, dry rot, electrical issues, a lot of times those are going to prevent a client from using FHA financing. And if that's all they have available to them, it kind of puts them at a disadvantage. So there's two versions of the FHA 203K. There's a streamline or a limited 203K, and that will allow the client to finance up to $30,000 of repairs on a home. So if the money is needed just to get something up to FHA standards, usually we can do a streamline or a limited. That's going to allow you to do the repairs, do paint, do flooring, and things of that nature. The full 203K actually lets the client finance up to $100,000. And if there's an improvement or something major that needs permits, a standard 203K can actually move load-bearing walls and do more structural improvements. So you can't use a 203K for luxury items. So you can't put in a swimming pool or anything like that, but you can do most improvements to a house. A perfect example would be replacing a roof. If there's a property that's not getting a lot of attention because the roof is falling apart, you could use a 203K to be able to do those repairs. So basically, it's still an FHA loan. So it's HUD insured, it has the mortgage insurance, and it does require a 3.5% down payment. So a simple example would be how we calculate the loan numbers on that is if there's a $400,000 home that needs $100,000 of repairs, we just take the 400,000 purchase price, we add on the 100,000 to have a final price of 500,000. So the client would need 3.5% of 500,000 to get into that home. I do have some notes here. So we covered the full versus the streamline. These, if you're going to write an offer on these, it's going to be a 45 to 60 day escrow. And the main reason being, there's just more moving parts. So it's a standard process, but on top of our normal process, we're introducing a few more people. One being a HUD consultant, and the other person being a contractor that's actually going to perform the work on the home. So in the beginning, it's really important to have that contractor identified, somebody that's familiar with doing 203K loans. And we're going to want to get the contractor, the HUD consultant, and the appraiser all at the property at the same day, so we can all be on the same page on what the process looks like. So the appraiser is going to do their standard report. It's an FHA appraisal. So if there's any FHA deficiencies, they're going to call those out. The HUD consultant also verifies what needs to be done to bring the home up to FHA standards. Like I said, whether it be correcting peeling paint, replacing a broken window, working on the roof, whatever that is. Now, the contractor is going to meet with the client, and they're going to provide bids to do that work. And then additionally, the client's going to come up with their wish list. So if they want to replace flooring, if they want new countertops and cabinets in the kitchen, if they want paint, they're going to go through with the contractor and let them know what they want done above and beyond the FHA work. And the contractor is going to provide a list of bids to the HUD consultant, to us as the lender, and then to the appraiser as well. So the appraiser is actually going to come up with two values. Once they know what work is to be performed on the property, they're going to do an as-is appraisal, and then they're going to give the home a value that they believe it would be worth after the improvements are done. So that needs to be in line with our purchase price plus the price of the improvements. Once all that's done, then we can submit to underwriting and proceed with the loan. One thing I do want to note is I can't stress enough how important it is to have a contractor that's familiar with how the 203K works. And I'll explain that to you now. So the contractor, they provide their bids up front. They get all the numbers together for the client and for us. Once the loan closes, the contractor gets 50% of their money at closing. So the contractor needs to understand that they don't get their money until everything's done. So once all the repairs are done, once the new carpet's in, once the kitchen's done, whatever the repairs are, the HUD consultant is going to go back out to the property and verify that it's been done. Once it's all verified, then the contractor can submit their paperwork to escrow to get the rest of their money. So with a streamline, typically we're talking about less work to be performed. So usually it's 50% up front and then 50% upon completion. If we're doing a standard 203K where there's maybe up to $100,000 in work, maybe we're moving walls around, the contractor can actually do that in phases, and they can have up to 5 draws to get additional money as they complete work. So, if doing flooring is phase one, once that's completed, they can request more money, then to do the kitchen, then to do paint, then to do structural stuff, whatever that looks like. Does anyone have any questions up to this point about that process?
Does the full project need to be completed within that 45, 60 days?
No, that's a great question. So the work to be performed doesn't even start until we close escrow. So our goal is to get you paid as quick as possible. So we're going to work on closing within that 45 days, possibly 60 days, depending on how quickly everybody gets their numbers together. So the client will actually own the home at the end of the 45 or 60 days, and then the contractor will begin work. Yeah, so we'll get the loan closed. And then the contractor, they sign a contract with us as the lender and with HUD. They need to complete all work within 6 months. And a really important piece is they need to understand how they get paid. And the reason we do that is they're incentivized to get the work done, in a timely manner. So they don't get paid until that work is completed for the second half of their money. So, we know how construction goes and contractors. So these people are approved by HUD to do a 203K. So we're going to make sure that they're bonded and insured, that their contractor's license and all their licensing that's required is current. So typically we're going to have a high quality contractor that's familiar with this, doing these projects. I did a home buyer class here in the office last night, and we had North American Home Services. We had a representative in the class, and they are actually approved to do 203Ks. So if you already have a relationship with a home inspector that also does work, you might check with them and just say, hey, if I have a client that needs this type of loan, have you done 203Ks in the past? And would you be willing to do them going forward? Again, having your team together and having everyone on the same page is paramount in the process.
When can a contractor submit their first invoice?
At the close of escrow.
So
yeah.
like 10,
So say that again.
like 10%?
Well, they can get up to 50% of their bids at close of escrow.
Before even starting the work?
Yeah. Yeah, because they'll need money for cost of materials and things like that. That's really what that first draw is designed for.
Cool.
Yeah, so that allows them to get started. And then on the full, they can do up to 5 draws throughout the process. Another thing to note is if there are permits involved for the work to be done, the permits need to be obtained prior to closing escrow. So HUD and us as the lender, we want to know that that work has been approved by whatever city or county that you're in.
How on God's earth do they think that's going to happen?
What's that?
Days. How on God's earth do they think that that's going to happen in 45 to 60 days?
For permits?
Uh-huh.
Well, it really depends on what's to be done, right? So like the easiest one is the streamline, because a lot of that stuff's cosmetic, flooring, paint, kitchen cabinets. A lot of those things don't need permits. But if you're talking about moving a wall, it's going to be a lot more severe.
Thank you.
You're welcome. Do you have any questions, Tom? Pretty clear on the process?
Yeah, pretty clear, man. I think you've answered all my questions. Just to confirm the name of the loan program, it's 2 or 3K.
No, it's 203K. So your standard FHA mortgage is a 203B. That's the HUD code.
Okay.
The natural disaster loan is a 203H, and the renovation loan is a 203K.
Okay.
And again, there's limited or standard, but they're both under 203K.
Gotcha. I don't do very many FHA loans, but yeah, this is helpful.
Yeah, I think they're coming back around. We've
Mhm.
been seeing more applicants looking for those loans, especially with rates going up. In general, FHA is more liberal in their underwriting.
Mm.
So they'll let you go up to 57% debt to income, where a conventional loan is going to cap you at 50, and a lot of jumbo loans are going to cap you at 43 or 45. So if it's somebody that was pre-approved earlier in the year and they were kind of at their max, it
Mhm.
might make sense for them to do an FHA loan just to keep their buying power up.
So from my experience, FHA loans require a clear pest report. Is that correct still? Or is that still accurate? I haven't done one in a while, but I think that was an issue that I had with an FHA loan, probably like a couple of years ago. Is that still the case?
So we only need a pest on FHA with a 2 or 3K loan, or if it's written into the contract. So FHA appraisers are a little more strict, and they're trained to call out any deficiencies that don't meet HUD's requirement. So if you do an FHA appraisal, the FHA appraiser should be able to call out any repairs. A pest report should not be required unless it's written into the contract. Now, a VA loan, we do need some type of pest certification. At Movement Mortgage, we don't want to see a full pest report. We just get a form called the NPMA 33. And a pest inspector, they'll go out and do a full pest inspection, but they can send us just the NPMA 33 saying that there's no active infestation, and we can get a VA loan funded without seeing a full pest report.
Interesting. Okay, that's great. That's
Yep.
good to know.
And some lenders don't allow that. Some lenders want the full pest no matter what. So that's been really helpful for us to streamline those VA loans in that process.
Gotcha. On the full package at 100K,
Yep.
does that qualify for luxury items like a pool?
No,
Okay, so not at
neither
all.
the full or the limited allow for luxury items.
Gotcha.
Yep.
Cool.
Yeah, so that's the 203K in a nutshell. I am going to send out the recording today. I'll include a couple flyers, and I can include a sample of the form. If you do know a contractor that refers you business, or you refer business to, they can kind of get started to get approved to do these if they're not already. So again, I was talking in the class, if you have a contractor that's one of your VIPs or referral partners, you can bring this to them and say, hey, here's a loan program. We might see more of these loans happening just because of the market. Ask them if they're open to doing it, and then we can get them started on the process of being approved prior to ever having a deal. Because as they slow down, they're going to probably want more work. So a good value proposition to offer your partners. And then, like I said, I can do reverse mortgage now. I'll dig a little bit deeper into that next week, but that's a really good program for people downsizing or, just selling and not wanting a mortgage payment. And then also I wanted to ask, so I had a Taco Tuesday event that was last month. I'm planning to do another one in December, and I think we're going to center that around kind of a mastermind class as well as business planning for next year. So if anybody's interested in that, please send me a message and I'll make sure that you're on the invitation list. That would be a live in-person event here at my office in Roseville. Do either of you have any listings or buyers that you would like to highlight on the call? No?
Nope, I don't.
Yeah.
All right. Well, we'll work on finding some.
Too many picky buyers for me.
Really?
I don't know if anybody wants them. Yeah.
Yeah. It's a little bit of a challenge. I
Yeah.
think one strategy to kind of drum up new clients is we've been going back about 12 months in our leads and just trying to open up the conversation for people that maybe were searching last year and maybe it was a VA buyer, maybe it was an FHA buyer that just couldn't get their offers accepted, and those people just got discouraged and decided to rent. I think it's a good time to warm those leads back up and just reach out to them and educate them on the current market. Say, hey, you do have the ability to be a little bit more picky right now. There is less competition in the market, and just share those opportunities with them. So I had a guy that was kind of back and forth earlier in the year and talked to him a couple weeks ago, explained what was happening, and he's actually back in the fold looking. So yeah, if you have leads in your CRM or your database from the last 12 months, I think it's good to block out some time and go back through those people to see who you can warm up.
Absolutely.
And then as far as interest rates go, we're still 30-year fixed average is above 7% at or up to 7.25, depending on credit score. But if you watched my recording from 2 weeks ago, I do believe we'll start to see rates come down by the first half of next year. So, when I'm talking to people about that conversation, sometimes they're discouraged when they see their monthly payment. And so what I say to them is, well, if the rate's 7% today, if you lock that in, and then in a couple months, rates go to 10%, how would you feel about your 7% rate?
Right.
But then additionally, if you lock in at 7% today and then rates go down, you can always refinance to take advantage of that lower payment. So if I can help out and call any old leads, I'm always happy to do that too. And just say, hey, this is Ben. I'm one of Tom's preferred lenders. I'm calling on his behalf. We were just going through our list, making sure we didn't forget about anybody. Are you still interested in buying a home? We know you were looking last year when it was kind of a frenzy. The market's changed a little bit. Are you interested in looking again? So if there's anything I can do to help with those prospects, please let me know.
Yeah, the only hurdles I've kind of run into with doing that is that the interest rates were so much lower back then when we were, getting them pre-qualified. And a lot of them just got priced out of the market for what they want. Right.
Yep.
And yeah, I think that's kind of been my biggest hurdle with kind of pulse checking, if you will.
Yeah. I mean, payments up. I saw a stat the other day. Payments are up 38% year over year. So that's a really big deal. That can open up the conversation to talk about maybe like a 2-1 interest rate buy down. So when I'm meeting with clients, I talk about that strategy. I mean, on a $500,000 home, if you do a 2-1 buy down, it's going to save $300 to $400 on your monthly payment in that first year. And then I also talk about the economics of what's happening with the Fed and everything, and how we do believe that interest rates will go down next year. So they should have an opportunity to refinance before that rate goes to the full market rate.
Gotcha. That's great. That's good stuff.
Yeah. If you ever want to sit down one-on-one and like kind of go through scripting or anything like that,
man.
I'd love to help.